Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for November the 24th, 2010. Now we've had a very volatile trading day today. We've got a couple of trades we're going to do for tomorrow. Now our first position is going to be in March silver futures contracts. We can see that we've had this retracement lower. The 3-day tried to cross, the 3-day did cross, excuse me, the 8-day predicted moving average, but failed right here at the 18-day predicted moving average, and subsequently we've moved higher. We've closed the day out at 2764.70. Our key level is 2619, 2684, and 2743. Now our predicted MACD is running flat. Our predicted true strength indicator is starting to move back up to the upside, still in overbought territory, but to be perfectly honest, I still like this silver trade. I believe it has further room to run than what gold does. So looking at everything here, we're now going to go in and look at our predicted high and our predicted low. We've identified the critical levels of support. Now we want to see what we're going to get here on a daily basis. But again, the potential for this thing to continue to move higher is again very strong. Now we've closed the day out at 2764, so we're looking for a modest pullback tomorrow to the 2717 area and then a move towards the 2793. So in the two trades that we're going to do today, our focus will be the daily report, and to stress how important it is. So at 2717 is going to be our entry point. We want our stops below the 2617 level. Very important that we stay out of that volatility. So we'll be looking for a pretty decent move tomorrow, and I see these silver futures contracts to be a little more productive than some of the other metals, particularly gold. Gold is absorbing a lot of volatility from the dollar strength, whereas silver is actually, as the US dollar moved up, silver has actually been moving up with that US dollar. So that's a very impressive move, and that's a correlation that we definitely don't want to overlook. So again, we're looking at that 2717 area to get back into the buy positions on the silver contracts. Now, that is our first position. Our second position, we're going to go into the Forex market, into the cross pairs this time. Now, looking at our second position, we're looking at the Canadian Japanese yen currency futures. Now, this one here, we've experienced some volatility today. We can see this long red candlestick. It's come through. It's broke the 18-day predicted moving average, but of all the yen cross pairs, the Canadian dollar really held its own. The Canadian Japanese yen, I believe that this currency pair has room to move considerably higher, regardless of what happens with the euro yen, the pound yen. These currencies are really getting hit hard, but the Canadian dollar is actually holding up quite well. We can see here that the 3-day predicted moving average attempted to cross the 8-day predicted moving average and failed. It's nowhere near crossing the 18-day predicted moving average. However, we did breach below on the daily here. So but key thing I want to point out is we've recovered, moved back up into the 81.19 to close. Key levels 81.27, 81.61, and 81.55. So if we're looking at this, our predicted MACD has crossed the trigger. We're above the zero line. That's all positive for a trending move. Predicted true strength indicator from Vantage Point also supportive of a move higher. Now, our day traders, we're going to be looking at one thing. Our position traders, we're going to be looking at quite another. I believe that this currency pair has room to move back towards that 88, 89 cent area, and it's a very good opportunity. So for tomorrow, what we're going to do is we're going to be looking at the predicted high and the predicted low will be our focus. Much like that silver contract, this is where the advantage of this software really comes in, because we need to know where the predicted high and the predicted low is, particularly during this volatility. So 80.60 is the predicted low, 81.88 is the predicted high. Your day traders, that's the range what you have to work with. Your position traders are still going to get in at this 80.60 level. 80.65 is what we're going to be looking for a pullback. The Neural Index is down the second day in a row. That's fine. The Neural Index is a 24-hour indicator. So the 80.60 level, 80.65 is where we want to get into those buy positions. Day traders, you're going to get out at the 81.80, 81.88. However, your more medium to longer term traders, much like myself, and this is a trade I'll be looking to get into myself, I'm going to be looking for a much bigger move here over a several month period. Now, looking back here at this Canadian yen pair, we can see that it spent a great amount of time between 90 and 94, and I believe we have the opportunity to get back to that level. Now, again, looking at the last time we had a move, on the predicted true strength indicator, we're getting a nice extension higher here. We're going to get a minor retracement, but for a longer term trade, we should be able to pick up anywhere between 300 and 600 pips on this trade, and even your day traders tomorrow should be able to pick up at least 85 to 100 pips on this particular trade. But we definitely, with a holiday short week, we want to respect that and understand that we're going to get probably some extreme moves. We've got some problems in the Eurozone. We now have further problems in North Korea and South Korea acting up again. All of this goes to risk aversion, and that could strengthen the yen a little more in the short term than what we would like. But in the medium to longer term, I think the yen is going to give those gains back. So those are the positions for November the 24th, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.